foreign investors broke their 7-month selling streak on the Nairobi Securities Exchange, injecting 1 billion Kenyan shillings in April, marking a significant shift in market sentiment. Now, this influx signals a departure from previous exits attributed to profit-taking following share price gains. Despite a decline in investor wealth, overall market capitalization saw a year-to-date increase. Analysts attribute renewed interest in local stocks to favorable macroeconomic conditions and expectations of interest rate cuts in advanced economies. Now, joining me from Nairobi, Kenya for this is Professor XN Iraki, an economist from University of Nairobi. Thank you so much, Professor, for joining me today.
Hello, good afternoon.
Oh, it's afternoon over there. Well, it's still morning here. So
yes, afternoon over here. With a lot of rain.
Absolutely. So now let's look at what actually informed, foreign investors' interest in the Nairobi Stock Exchange to the tune of 1.06 billion shillings in April alone. I mean, that was after a 7-month sell-off run. How impressive, really.
That's a lot of money, but not very surprising. It is a clear indicator that confidence is returning in the Kenyan economy, driven by a number of factors. One of them is, if you remember recently, we paid back part of the Eurobond. That was a very good signal to the investors that the Kenyan economy is turning out. In addition, we have seen the price of oil going down. In the last few months, we have seen the exchange rate strengthening from about 160 Kenyan shilling to $1 to about 135 by now. And inflation is also down. So these are some of the factors that have made people realize that the Kenyan economy is improving, and it is time to invest. And the foreign investors have been cheered up, and they have come back to invest so much money.
All right, so are we seeing any impact on the foreign exchange market as a result of this inflow?
Yes, the exchange rate has really strengthened. It was as high as 160 Kenyan shillings to $1 Kenyan dollar. Now it is about 135 Kenyan shillings to $1. It is a substantial increase. And that has really helped the price stabilize. And it's more the reason why we are saying inflation has stabilized and the market has cheered up.
All right, so let me look at the dynamics there, because here in Nigeria, the local investors sort of run the show in the equities market. We've overtaken the foreign investors. However, I'd like you to talk to us about the dynamics in NSE, that's the Nairobi Stock Exchange, and maybe what is preferred over there, because before now we see sort of a 70-30 ratio for foreign investors and local investors in Nairobi. What's the dynamics now? What's preferred?
I think when I look at the Nairobi Stock Exchange, you have a mixture of both foreign and local investors. But it appears the foreigners are more sensitive to the market than the locals. The locals are just here. So when the economy is not doing very well, the foreign investors seem to free and take their money away. But when things improve, they come back very quickly. So I think they seem to have more information compared to the local investors, and that's more the reason why you see them going away and coming back. But the local investors seem to take a bit longer to get the information and understand the market.
You know, what you said now, actually, that was what came to my mind. I felt these are savvy investors, really. They look at what's happening around and they make decisions, just that sort of, with decisions that are sort of perfect with timing and all of that. So what should we do now? Should we talk about maybe you want to organize some classes for the local investors to make them understand all of those things and become, savvy and all of that? But, I mean, that was just a joke. Looking at the figures now, it sort of feels foreign investors see value in 2024. Because they disposed of shares worth 2.2 billion shillings in the opening quarter of 2024. I mean, compared to the whole of last year, when they dumped about 21.1 billion shillings in local equities. Do you see this particular trend continuing to the end of the year? Because when you look at it, 21.1 throughout 2023 and just about 2 billion for the first quarter of 2024. The difference is clear. Do you see this trend continuing?
I think this is what every Kenyan investor, every Kenyan businessman, every Kenyan citizen would want to see continuing. Because when the foreign investors come, the exchange rate improves. If the exchange rate becomes stronger, the inflation goes down. So if you look at the economic predictions, is that up to next year, the Kenyan economy will be growing at about 6%. So I think this trend is going to continue unless we get a shock in the economy. And for the foreseeable future, I don't see that happening. So it's very good news, not just the foreign investors, but also the local citizens. Remember, we have been complaining about the high cost of living, high exchange rate. So we all hope this is going to happen, but we must consider the external factors, which sometimes are foreseen. As we talk at this moment, we have been having very heavy rains. That might have an effect on production of crops because some crops might be destroyed by the heavy rains. But I can assure you, everybody is hoping for the best.
All right, let's do a sectoral analysis of the NSE. What are the trends there? And, what are your predictions moving forward? Because we also saw that the banking sector took a hit. And the same thing sort of happens here in Nigeria. The banking sector is also taking a hit. So do just sort of a sectoral analysis of the Nairobi Stock Exchange and what your thoughts are for the investors.
I think if you look at the Nairobi Stock Exchange, it has not been performing very well for the last 1 year or so. But now that things are turning up, I think it is going to attract more people. When investors start coming back in droves, they set a signal that the market is doing very well. They set the signal to the others that it is time to get in. So I foresee the market, the stock exchange doing very well. And if you also need to look at the dividends, a lot of companies have been giving people their dividends despite the economy not having been doing very well. And that is attracting a lot of investors because they will get dividends, the economy is improving, and I want that exuberance to continue to the next year and beyond.
All right, that's interesting. So how can individual investors sort of leverage the current market conditions to optimize their investment portfolios?
This is a good question because one of the biggest problems we have been having in this country is that a lot of people prefer to invest in real estate. Real estate here is very big. And the price of land, the price of real estate has been going up. So if the stock market becomes active as it is, it will be giving Kenyan investors a very good alternative that you don't need to put all your money in land. You can put your money in stocks and earn some dividends. So it's a very exciting moment.
Thank you so much, Professor XN Iraki, Economist, University of Nairobi, for sharing your thoughts with us today.
Thank you and have a good afternoon.